Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we're bringing to you the key news, stories and data points that move container markets and hence your business. Today is Monday, very sunny indeed today here in Hamburg, and we're having a quick outlook at the week. It's a busy week in terms of economic indicators. Today we have from the US durable goods orders numbers coming in. On Wednesday, we have PMI, so Purchasing Manager Index from the manufacturing industries come in both from the Euro area as well as from the US, also indicating where the global economy is heading, what is happening to the overall demand for durable goods, for manufactured goods, and hence for shipping capacity. And then Thursday, everything looks at Europe because there's data coming in for consumer confidence and inflation updates, inflation forecasts for the remainder of this year. So very, very busy week in terms of indicators indeed. Then as well, let's have a quick look at our insights, the charts of the day. First off, container trading. So we look at 40-foot high cube cargo-worthy containers in Hamburg, Ningbo, and New York from 2021. Quite interesting here. Of course, at the beginning of last year, Ningbo, in this case, as an exemplary for a Chinese location, significantly trading at a significant surplus or markup compared to Hamburg and New York. That margin has narrowed and has now actually inverted in on some days. That a cargo-worthy container in China is just as expensive or cheap as it is to be gotten in Hamburg or New York. Of course, it's going to be interesting to see how this develops over the next couple of weeks when we might see the first larger sort of off-hire sell-offs to hit the market. It's going to be interesting to see when depot capacity is at its peak, and then also shipping lines and leasing companies are forced to sell off some of their cargo-worthy units. Hamburg, we've actually seen some uptick here in the last couple of days, so that now actually the three locations are all trading roughly at $2,000 in terms of our cargo-worthy container standards. Then on the leasing side, let's switch over to leasing. These are SOC container leasing developments for 40-foot high cube from China main ports, so Ningbo, Shenzhen, Qingdao, etc., to or US locations that we have in the system. So it's Houston, it's of course Long Beach, it's other inland locations, it's New York, as we've seen before. And the period is the last 12 months. And as you see here, these are pickup charges from China to the US. Paid by the user. And as you see here, last year, especially up to the second half, was still very, very volatile at a very high level. And then this has come down. Volatility has also come down. So volatility meaning the amplitude of the price swings has come down significantly. So that now we're bottoming. It seems like we're bottoming out here at somewhere around $400 per 40-foot high cube container. Still paid by the container user. Also, that might invert in some locations once containers become so sufficient and such a surplus that the container users will be getting money from the suppliers to move the boxes. Actually interesting when we look at the last 4 weeks here, this price chart shows us this looks relatively flat, but it actually means that we've come down on these stretches from a price level of roughly $500 in the beginning of the month to now around about $400, $420. So this is a decrease of 20%, so quite significant. And now it seems like we're bottoming out here. Keen to see how the next 4 weeks will play out. That's it from today from our end. Hope you have a very successful week ahead of you. Enjoy your day and talk to you on Wednesday. Take care.